The IRS handed out over $7 billion in penalties last year alone, and a huge chunk of that went to small business owners, LLC owners, just like you, who made one classification mistake when hiring. They hired someone, called them a contractor, paid them, moved on, and then months later, sometimes years later, the IRS knocked on their door and said that person was actually your employee. Back taxes, penalties, interest, audits. Do not let that be you. What's up everyone, welcome back to the channel. If you're building a business, running an LLC, or even just thinking about hiring your first person, this video is for you. Today we're breaking down one of the most misunderstood and most costly topics in small business, the difference between a W-2 employee and a 1099 independent contractor, and exactly how the IRS decides which one your worker actually is. We're covering the rules, the test, the red flags, and what you need to do right now to protect yourself. Let's get into it. What's the actual difference? Alright, let's start from scratch. When you hire someone, there are two ways to classify them under the tax code. The first is a W-2 employee. This is a traditional hire. You control when they work, how they work, and what tools they use. You withhold payroll taxes from their paycheck. Social Security, Medicare, federal income tax, and you, as the employer, pay a matching portion. You're also responsible for unemployment insurance and potentially benefits like healthcare. The second is a 1099 independent contractor. This person is running their own business. You hire them for a specific result, a logo, a website, a consulting project, and how they get it done is up to them. You don't withhold taxes, you pay the full invoice. At the end of the year, if you paid them $600 or more, you issue a 1099 NC form. Sounds simple, here's where it gets complicated. The IRS doesn't care what you call them. And I need you to hear this clearly. It does not matter what title you put on the contract. You can write independent contractor in bold letters across every page of your agreement, and the IRS can still reclassify that person as your employee. Why? Because the IRS looks at the actual working relationship, not what you call it, and they use a framework called the common law test, sometimes referred to as the 3-category or behavioral, financial, and type of relationship test. Let me walk you through all three, the 3-part IRS test. Category 1, behavioral control. Does your business control how the worker does their job, not just the result? If you're telling them what hours to show up, requiring them to use your equipment, training them on your processes, or setting step-by-step instructions, that's an employee relationship. That's behavior control. A true contractor decides how, when, and where they work. You give them the destination, they choose the route. Category 2, financial control. Can the worker make a profit or take a loss? Do they work for multiple clients? Did they invest in their own tools or business setup? If the answer is no, if they only work for you, you set their pay, and they have no financial risk of their own, the IRS sees that as employment. True contractors run their own show. They invoice multiple clients, they market themselves, they own their own gear. Category 3, type of relationship. Is there a written contract? Does the worker get benefits? Health insurance, paid time off, a pension? Is the relationship permanent and ongoing, or project-based? Permanent, benefit receiving, ongoing workers look a whole lot like employees in the IRS's eyes, even if you call them contractors on paper. Here's a rule of thumb I want you to remember. The more control you have, the more likely they're an employee. Real world examples. Who is who? Let me make this concrete with some quick examples. You hire a graphic designer who works only for your company, uses your computer, works your hours, and has been with you for 2 years. That's an employee. Issue a W-2. You hire a freelance copywriter who has 5 other clients, works from their own laptop, sets their own hours, and you hire them for a one-time product launch. That's a contractor. Issue a 1099. You hire a virtual assistant who works 40 hours a week, follows your daily task list, and reports to you every morning. That's an employee. Even if you're paying them through PayPal and calling it freelance, the relationship is what it is, regardless of the paperwork, the cost of getting it wrong, misclassification. Now let's talk about what happens when you get this wrong. If the IRS determines you misclassified an employee as a contractor, here's what you could owe. Bulk payroll taxes, both the employee and the employer share, failure to file penalties, interest on unpaid taxes, and in serious cases, criminal charges for willful misclassification. This isn't a slap on the wrist situation. This can bankrupt a small business, and it's not just the IRS. Your state can audit you separately. Workers can sue for benefits they were denied, and the Department of Labor can launch its own investigation. One wrong classification, multiple fires. What to do right now? Protect your LLC. So what can you do? Here is your action plan. Step 1. Audit every working relationship. Go through every person you are paying right now. Run them through the 3 category test. Be honest with yourself. Step 2. Get your paperwork right. If someone is a contractor, have a proper independent contractor agreement that spells out the scope of work, timeline, payment terms, and their independence. This won't guarantee protection, but it builds your case. Step 3. Use the IRS's own tools. Form SS8 allows you to ask the IRS directly to determine the status of a worker. It's free and gives you a written determination. Step 4. Get your LLC structure right from the start. If you haven't properly formed or organized your LLC yet, that's step 0. Services like Northwest Registered Agent and Zen Business help you form your LLC correctly with registered agent support and compliance tools built in. LegalZoom and Rocket Lawyer are great if you want attorneys on standby to review your contractor agreements. And Harbor Compliance is excellent if you want professional grade compliance management as you scale and hire across multiple states. If you're just getting started and want a simple, fast setup, Swift Filings Inc. Authority, Taylor Brands, and Brizey all offer straightforward LLC formation packages with business tools included. Links to all of these are in the description below. I've used and reviewed them, and they genuinely save you time and reduce costly mistakes. Step 5. When in doubt, classify as an employee. The risk of wrongly calling someone a contractor is catastrophically higher than the cost of running payroll correctly. Here's the bottom line. The W-2 versus 1099 decision is not just a paperwork choice. It is a legal and financial decision that follows your LLC for years. The IRS is not lenient on this. The penalties are real. But the good news is, you now know the rules, you know the test, and you know what to look for. If this video helped you out, hit that like button. It seriously helps more business owners find this content. Subscribe if you want more straightforward guides on LLCs, taxes, and growing a business the right way. Drop your questions in the comments below. I rate every single one, and I'll see you in the next one.